Okay, let's explore exercise 18-12. Now, this is an exercise that requires some understanding of how the balance sheet works, how income relates to the balance sheet, and also how financial ratios work. Okay, so we've got Panza Corporation, and they had a fire at the end of 2020. And they say its financial records were partially destroyed, but it provides this information here and 5 other factors. Okay, they tell us the inventory turnover is 3.7, return on common stockholders' equity is 26%, there was no additional paid-in capital, accounts receivable turnover is 7.8, return on assets 12.5%, and total assets at December 31st, 2019 were $591,000. All right, now with that, let me slide this. They ask you to solve these 4 items, all right? So we have to compute the cost of goods sold for 2020, net credit sales, net income, and total assets, all for the end of 2020. That's the second year, right? First year, 2019, December 31st is the second year. Okay, now I've shown the math involved and how you would need to tackle A, which was to compute the cost of goods sold for 2020. Well, they told you that inventory turnover was 3.7, and the formula for inventory turnover would be inventory turnover is equal to cost of goods sold divided by average inventory. All right, so since we have inventory turnover given in the problem, 3.7, and we have beginning and ending inventory, there's the 199, there's the 186, we can compute average inventory, then all we have to do is use algebra to solve for cost of goods sold, and that's how we come up with the answer to part A. Okay, next they ask you to determine net credit sales. And what do they tell us about that? Well, they tell us accounts receivable turnover is 7.8 times. Well, if you know that and you know the formula, you know that accounts receivable turnover is equal to net credit sales divided by average accounts receivable. They give us the 7.8 answer, and they gave us the receivable balance, $77,500 and $123,500. So we can add those two together, divide by 2 to come up with the average. And now again, we have the solution, a denominator. We can use algebra to solve for the missing item. The missing item is net credit sales, and that's how you tackle part B. Okay, now we use essentially the same approach to find part C. What's the net income for 2020? Well, they've given us return on common stockholders' equity. They've given us there the amount of 26%. So what's the formula for return on common stockholders' equity? Well, it's equal to net income divided by average common stockholders' equity. And luckily, they gave us the common stock and retained earnings for both periods, so we can compute beginning and ending. And they told us there was no additional paid-in capital. So once again, we've got the solution of the ratio and a denominator, and we just use algebra to solve for the missing item, net income, which is the numerator. Okay, and then finally we get to part D, where it says compute total assets. Well, now the ratio that we want to use is return on assets. And we know return on assets was 12.5%. It's equal to net income divided by average assets. Well, we've already computed net income, so then we need to focus on average assets. Or another way of thinking about this is we have 12.5% and we have net income, so we can use algebra to calculate what the average assets are. But remember that average assets are total assets, essentially beginning plus ending divided by 2. All right, So what do we know? Well, they gave us 591,000 as the beginning, so we've got to figure out what was the ending. To do that, we know that we have the ending plus the beginning divided by 2 was equal to average assets of 103,520. Okay, so again, we're just sort of going in order. First, we have to calculate what average assets are. We've done that here. Then we have to put in the missing links, and using algebra, we can back into that amount, which turns out to be 1,479,640. Okay, so this problem is essentially all about saying we have 2 of 3 values, solve for the missing value.